not often, but fairly often. It's been asked a couple of times by folks that just started following the channel. Sometimes I talk about breakouts. Sometimes I talk about buying a bounce off of a certain level. And the question is, well, which one should I use? Which one's better? I think I get that a lot in trading. Which system's better? Which method's better? Which indicator's better? Which blah, blah, blah is better? Long and short of that is the one that's better is the one that you're going to stick to and you're going to use consistently. That's the one that's better. That's the method that's better. That's the indicator that's better. That's the expert advisor that's better. That's the system that's better. The one that you're actually going to use and you're going to apply. That's the answer. I know that's not what you want to hear, but that's the truth. It's the hard truth. I'm going to smack you in the face with it. That's the one that's better. And I want you to just take a second, step back, think about this logically for a second. And then here's another, I'm going to go off on a sidebar and a little bit of a tangent, but I get this a lot too. I know a lot of people in the trading niche, in the trading industry, a lot of people, a lot of folks that sell courses and do coaching and have methods that they teach. The number one frustration constantly is that people get the product and use it for a week, have a couple of losing trades, start yelling from the treetops that that system doesn't work and that person's a fraud and blah, 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 and then they move on to the next one. And then they do it again. They repeat the same pattern. Then they do it again with the next one. And then they do it again with the next one. And they do it again with the next one. The common denominator is they haven't truly given any system enough time to actually work. The system works. The people that are using it do very well with it. Those that don't stick to it and apply it the right way don't do well. It's the exact same thing when it comes down to playing a breakout trade or looking at levels and playing a bounce off of certain levels. There's always going to be a situation where it doesn't work, and that's why money management comes into play. That's where mindset comes into play. If you're not consistent with the application of it, you're never going to have consistent results. So the method that works is the one that you will work and stick to and use good money management with. Again, I know I've said this over and over and over. I'm going to keep saying it. Literally, no one in the entire world knows what the market's going to do next. We can have a little bit of prediction based on what our trading edge is. We can say, okay, these things have happened in the past. I've got this for momentum, and it's come to this level, and this level's been respected before. I have based on my trading method and the history I've gotten and applying this and practicing this and looking at this historically, it looks like that's going to have a high probability of moving in my direction, right? So we can forecast that a little bit. But the reality is we don't know. There's no certainty. And it seems like everyone's coming into the market looking for some level of certainty. Now, in my mind, this is my opinion, obviously. I'm here, I guess, for my opinion. When it comes to breakout trades, that works a little bit better psychologically because, let me go over to a chart real quickly. Today has been just a tear on the ES here. So if you're looking, and this is a 30-minute chart, I'm just throwing this out there. Obviously, well, we won't get into what we talked about this morning. If we're looking at something like this, and let's say we, look at the high and look at the low where it had been for the day prior to this big move, right? And we're saying, okay, we're coming into the new day. What do I want to trade? And we say, well, if it breaks above this, we'll go long, and if it breaks below this, we'll go short. That's one way of looking at the marketplace, right? That's a breakout. You've got a channel that something's been trading in, and when it breaks above or breaks below that channel, you would trade it, right? That's called a breakout trade. Psychologically, I'm just going to remove these trend lines because these aren't ones I was using. Psychologically, there's a level of confirmation there. it's easier to sell with a big red candle or buy with a big green candle going through the top of your level than it is to buy when you've got a big red candle coming down to a certain level. So I feel like breakouts are a great spot for a new trader to start because, again, you're looking at a certain trend over a longer period. Let's say let me just blow this up real quickly. Let's say we look at a 4-hour period and we see that we've got a certain trend happening, right? Got a certain trend happening over a longer period. So I think everyone can look at this and agree trend is up, right? So we've got this trend happening over a long period. Psychologically, if you're trading with that trend and you've got a channel that has developed, wherever that might be, and price suddenly moves with some strength, with some momentum behind it, above that channel, breaks through that channel, you're trading with that trend on a break of the channel. It gives kind of that level of confirmation that traders often want to see. It feels good, right? You're trading with something, you're taking that movement up. If it's moving down, downward trend, it breaks through the bottom of a channel and you trade that breakout short, you're going with something. That I feel like that's easier for someone to apply because it has that level of confirmation that so many people want. A lot of people come into this market wanting, what's the right word I'm looking for? They want certainty, right? They want certainty. If A happens and B happens, then C has to happen. A plus B equals C. 2 plus 2 equals 4. That's how they look at the market, very, very black and white. The reality is, in trading, in any market, every piece of it, whether you're trading options or you're trading stocks, if you're trading Forex, if you're trading crypto, if you're trading equity, futures, whatever it is, 1 plus 2 does not always equal 3. A plus B does not always, C does not always follow. It's just a fact of it. There's randomness in the marketplace. In every market, there's randomness. There's certain things that do occur, and there's certain ways that we can give ourselves an edge, but a lot of that just comes back to having the right math and having something that we execute consistently off of, right? So traders want certainty. There is no certainty. You've got to let that go. I hate to tell you that, but you've got to let it go. I don't hate to tell you that. I feel good telling you that because you need to hear it. You've got to let it go. There is no certainty. Just because something happened in the past a certain way does not mean it's going to happen in the future the same way. There are different factors every day affecting the market. Right now, this is January 24th. I'm recording this, so some of you are watching it now. Some of you might watch it 2 weeks from now, 5 weeks from now, whatever. Right now in the marketplace, we've got the virus in the Wuhan province of China. And there's more and more deaths being confirmed. There's spread of this virus that are being confirmed. That's having a major impact on the market that's totally out of left field, right? So even if we had this earnings report that came in a certain way, and we had this report that talks about consumer sentiment, and this report that talks about this, and all those things are showing strength, and in theory, we should be seeing an increase in a certain instrument. But there's another factor that's never existed, right? It's totally out of left field. It's an entirely different factor that comes in and it has a different sentiment in the marketplace. So every day, the factors that are driving the market are different. So A plus B does not always equal C because the factors that drove A to occur and the factors that drove B to occur are going to be different. And that's going to give a different outcome. A plus B might equal F. I don't know, just throwing out some random letter because that's the truth of the market. It's the truth of the market. Now, we have to take that in consideration. We can't just go, oh my God, it's totally random. I'm never going to be able to figure this out. That's not true. That's where a consistent process comes into place, right? So coming back to charts and talking about things over here, sometimes I look at levels and I look at a bounce, and sometimes I'll look at certain things that are happening and I'll take a breakout. A lot of that really comes down to experience and seat time. Again, something else most new traders don't want to hear. They want the answer now. Just tell me how to do it. Just tell me how to do it. I've never done it before in my life. I've never been successful with it in my life. But you tell me what to do, I'm going to do that exactly, and I expect to be profitable from here on out. Okay, reality is, unfortunately, you've got to practice. You've got to have some level of experience. You've got to have some seat time involved in order to develop a plan. My plan varies through the day depending on market conditions. That's because I've got more seat time. I can vary that plan a little bit here and there depending on what's happening. My suggestion would be, though, if you're new, you're starting out, you're trying to figure out what am I going to do, how am I going to look at the markets, find a method that you're comfortable with and then do that consistently. I feel like a really good place to start is that breakout method because it offers more things that have good psychological backing and make you feel good as a trader, right? So, playing a breakout strategy is finding a channel, and you have to be patient for this, by the way. Another mindset thing that's kind of tough, but you've got to be patient, is looking at something on a longer time frame, finding a channel. Whoops, I'm looking over here, but I'm not showing you my screen of what I'm looking at. Finding a channel that something's trading within, and then waiting patiently for it to break that. And you could go 4 hours, you could even go 30 minutes. I mean, the channels typically will show more of what's actually happening. I think you'll get more defined channels on a 30-minute level, but use the 4 hour as a guide to tell you what the overall sentiment is and what the trend is, right? So use the 4 hour, find out what the trend is, then drill down to a 30-minute and find your channels that something's trading within. So if you're coming into the market, like right now, there's all kinds of madness because we just had some announcements about the virus. But if we're looking at the market, we're coming into a new market session, hasn't opened yet. Look at your tops and your bottoms. Say, okay, I've got a channel that's over here. I've got a bottom where things have bottomed out, and I've got a high up here of where things have just been on this current day, where we've kind of topped out. And then look at that and go, okay, great. So we're trading in between it as the new market starts. If it breaks below this, I'm going to sell it. If it breaks above this, I'm going to buy it. That's a great way to go. And you could even take it a step further and filter it out and say, well, on my 4 hour, I'm in an upward trend. So I'm only going to look at the opportunity if it breaks above this to buy it. And if it doesn't, then you don't trade that day. There's really easy ways to look at this that doesn't have to be complicated. It gives you an edge and it allows you to feel good because, again, if you're in an upward trend and you have a big green candle breaking above that top, psychologically, you're going to feel better with that trade. Okay? Now, some people have more of a, I don't know what the word I'm looking for is. They want to be, dang it, where is it? There it is. Some traders just simply want to be contrarian, right? You like being contrarian. Okay, that's fine. If you've got your channel, you can certainly look at opportunities where it comes down to a certain level and then buy off of that. Psychologically, though, it's tougher because you're having to put a buy order in the face of a big red candle. So if you're starting out, I feel like a great place to begin is with the breakout method. Exactly what I just discussed there. Okay, so that's my thought on it. Breakout versus bounce. I do both, but learn one first. Learn to execute it consistently. Do it over a good period of time. 5 trades is not a trend. 10 trades, 20 trades is not enough of a sample size to let you know what's going on. I think you need 75 to 100 at minimum. But you can do that by back testing as long as you're honest with what levels you're looking at and really look at the losses as well as the wins. Our brains have a tendency to want to filter out the stuff that doesn't work and let that go behind us. We've got to be very honest when we're doing any kind of a manual back test or even a forward test for that matter. But forward tests are a little more, it hits you in the face with those results right away. But when you're doing a back test and you're trying to find out, how you're going to work something, be honest with the times that it doesn't work for you. It's key to know what the negative potential is, the drawdown potential is there as well. All right, so anyway, that's it for me. Breakout versus bounce. Both are very effective trading methods. Bounce can be considered top edge, bottom edge. Breakout is a break, right? Both are very effective trading methods. They can both be used to trade profitably over the long run. Both of them, no matter which one you're using, you're going to be wrong. So you've got to control your stop loss. You've got to have good money management involved. End of the day, though, if you're a brand new trader, psychologically, I feel like the breakout trading process gives you more psychological buy-in, and it's easier to stick to over a longer period. So I feel like maybe that's a great place to start. Learn it, use it, apply it, get a good sample size behind it. When you're consistent with it, then start looking at ways that you can incorporate different trading methods or different filters or different things that will help you make decisions kind of more of on the fly. All right, so there it is. Have a great day. I hope this was helpful. If you like it, subscribe to the YouTube, subscribe to my Facebook channel, whatever. I guess it's not subscribe to Facebook. You follow on Facebook. Follow me on Facebook. Subscribe to it on YouTube. Tell your friends about it. I do this for free. It's my way of paying it forward. I really want to help you guys weed through the BS out there. I've been in this industry long enough to know there's a lot of it. I've operated in the background of a few different big trading educators out there. I know what works and I know what doesn't, and I know what works mentally, because often the challenge is right in front of us. It's that problem between the chair and the keyboard, the human involved. I want to help you with that. That's what I'm here for. So anyway, that's it for now. Have a great day.